Hello, welcome to another Mr. James Accounting tutorial. Today we will be looking at the Keep Accounting Unit 2, Paper 2, Module 1 for 2010. It's a paper that has been much requested that I made a video out of it, so I will attempt to do so tonight. Yes, let's get right into it. Okay, we are given 15 items here, and we are to classify them into different categories of one according to the cost behavior and one according to period and product cost. So this item here, selling administrative cost, could also be called period cost. Okay, so what we will do, what I've done in fact is to draw up a table with the cost behavior and the selling admin and the product cost. And remember, this is period cost and product cost here, and a column here for the number of the item from here. Right, I will not be reading them through one by one, but you can do that and check it back against the answers that I have. So let's move into the next slide where we have the answers. Okay. Here we have the variable cost and fixed cost is cost behavior, and I have selling and admin, which is period cost and product cost. So you can draw an imaginary line down in the middle here, and these two, you must choose one out of this and one out of this. The first one was done for you, the variable cost and product cost. Now, um, you must have a reason why you think they are variable or they are fixed. You cannot just guess it. Okay, so I will leave the rest of this exercise to you. These are my answers. You try to figure out how I came to this conclusion. The next problem is based on labor costs, direct, indirect labor costs. We have Darren Joseph is employed by Arima Products and assembled a product part for one of the company's product lines. He is paid $20 per hour for regular time and time and a half for all work in excess of 40 hours per week. So up to 40 hours here would be regular time. Assume that during a given week, Darren is idle for 5 hours due to machine breakdowns and that he is idle for 4 more hours due to material shortages. No overtime is recorded for the week. Allocate Darren's wages for the week between direct labor costs and manufacturing costs. Alright, so direct labor costs and manufacturing costs would be indirect labor costs here they're looking at. Okay, now you have to know the rules for this here. Otherwise, you can't allocate or apportion anything here. Okay, the rules are simple. All the regular time, when work is done, you would pay at the regular hour, and that would regular rate per hour, and that would be direct labor. The overtime, idle, well, not the idle, but the overtime, if it is normal overtime and they did not ask him, the client that he is doing the job for, did not ask for the overtime to be done, then you have to charge the overtime wages as indirect labor. You cannot charge it to the job. Okay, and it would be overheads rather than direct labor cost. The idle time is always overhead, right? Part two, assume that during the following week, Darren works for a total of 48 hours. He has no idle time for the week. Allocate Darren's wages for the week between direct labor costs and manufacturing overhead costs. Okay, so this is indirect labor costs again here. Arima Products provides an attractive package of fringe benefits for its employees. This package includes a retirement program and a health insurance program. Explain two ways that the company could classify the costs of fringe benefits for direct labor workers in its cost record. So we're looking at the fringe benefits for direct labor workers, right? We get right into the answer. So the first part of the question is idle time is 4 hours by $20 with $80. Breakdown 5 hours by 20 hours, $20 is $100. And regular hours, the next 31 hours by 20 is 620. Okay, these here must total the 40 hours for the week. And we get a total wages of $800. And we're going to apportion that as follows. The regular hours would be direct labor, like we said. The breakdown time and the idle time, we cannot charge the client for those. Therefore, it's going to be manufacturing overhead or indirect labor costs. That's 180, going back to the same total 100. Okay, so let's move on to the next part. In part 2, the regular hours is 40 by 20, that's 800. His overtime is 8 hours by 1.5 or 1.5 times, $20, and that gives us 240. So his total wages are 1040, and we're going to allocate that as direct labor costs of the 800, the manufacturing overhead, which would be the overtime here, of 240. Okay, so if you didn't know this, that the overtime would be manufacturing overhead, but the overtime can become direct labor cost if the customer asks you to work overtime on the product for him. Okay, then it becomes direct labor cost. Right, the last part, we can charge it as manufacturing overhead, the fringe benefits, or as administration costs. Alright, so we'll look at it in the next slide and see how and why. So two ways to classify the fringe benefits to the direct labor workers. You could classify the entire thing as manufacturing overheads, because since they are not going to work for it, so it's a fringe benefits, so it cannot be directly traced to the product itself. So it would be an indirect cost of factory workers. So it belongs in the manufacturing overhead. You can also reason the other way, that is an administration expense is something that the admin people are given to the factory people, right? So they are treated as a period cost and cost of the period and charged as administration expenses. Okay, let's move on to the next. Okay, part C. You have gathered the following information relating to Montego Bay Company, which has two service departments and two production departments. So this is allocation or apportionment of the service departments cost to production departments. Okay, so you have them here again as well, and here. Now this normally gives students a lot of problems. Service department costs. Right now, what really happens is that the service department, the cost from here, the units that are produced in the factory, that this is not part of the factory. So you don't know have any units passing through here as you have passing through these production departments here. But yet they have overhead costs attached to them. Okay, and you have to allocate these now into here. When you get the total for these two departments, then you can charge them to the product. Okay, so Montego Bay makes no distinction between fixed and variable costs incurred in its service department. Alright, okay, so it's not going to make any distinction here between fixed and variable here. You just have the lump sum accumulated, the cost of these two departments here. And calculate the total service department cost that should be allocated to each production department using the direct method. This is another thing again here now, the direct method. The direct method pays no attention to the relationship between these two departments, whether they produce a service for one another, and therefore some of the cost of this should be apportioned to this. You're noticing a relationship here, right? Okay, but if you use the direct method to apportion these costs, it will ignore the relationship here. Okay, and just deal with the relationship here. Okay, so let's see how we go about looking that up. Okay, have some explanation here. In allocation, the service department cost of the production department. Using the direct method, we ignore the reciprocal services offered between the two departments, right? So we ignore department 1 and 2, whether they provide a service for one another. We focus on the relationship between the service departments and the production departments. Alright? So we only focusing on the service that the service department provides for the production department. Alright, we take a look at the workings. Now you can flip back and check that these figures are correct. I'm not going to do that with the video. In department A, the square feet, the size is 10,000 and 13,000 for department in square feet. Right? Given a total of 23. Notice we have ignored the service departments. We just take the production department, department A and B. We add them together, we'll get 23. Now 10 is 43% of the 23. And the 13 is 57% of the 23. So this department will get 43% of the service department overheads, and this department will get the other 57. Okay, when we're doing it according to the number of employees, this is the department 2 now, service department 2. When we are portioning that, we look at the number of employees in A is 48, 28 in B, we get a total of 76. Okay, 48 out of the 76 is 63%, or 0.63, and 28 is 37% of 76. Right? So we do the apportionment here, and then we put the answer in our table. Okay? Portioning X1. S1 has 268,000, so we take the 43% from here and find 43% of it. We will get 116,522, and we will get 57% or 151,478. In apportioning S2, the other service department that has $228,000 in overhead costs, we will use the figures we work out here, 63% and 37%, and we'll get 144,000 for Department A, 84 for Department B. Now let's look at how the totals work out. Already allocated is 150,000 and 240,000 to A and B. That's the first line in the table that we are given. And after we apportion S1, we got these figures. You can check it back in the workings on the previous slide. We got these figures. I have the total here, 268. Okay, apportioning S2, we got 144,000 and 84,000. We add it down this way, we'll get the total overhead costs for each department here. Okay, so this is really the answer for part C. Right? So that brings us to the end of the module. I hope you find it informative and you make good use of it in your exam. Your exam should be coming up on Friday, 27th, and I wish you God blessing and your exams. And if you would let me know what grade you got after you pass, I'm hoping for grade 1 for you. And I will perhaps see you again in the next slide.